What's up, traders? So today I'm going to show you two stocks that I am extremely bullish on. I'm going to show you why I'm bullish on them, and I'm going to show you a potential leaps trade on both of them that is developing as we speak. And on top of all of that, I'm going to show you how I plan on selling puts on that company until it's time to buy leaps in order to be paid to wait around for the perfect setup. And then we'll look at a potential trade within the Moomoo platform. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I've been blessed to be able to use the money that I make from the stock market in order to pay for my entire lifestyle. Now, before we begin, if you could, pretty please go ahead and smash that like button. That just helps push this video out to more people, and hit the subscribe button because we have amazing videos coming up soon. And do remember that I'm not a financial advisor, and this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. Now, if you're familiar with me, you know I have to share a word from God that has to deal with money, building wealth, or business. And for today's scripture comes from Proverbs 10:4, and it says, "Lazy hands make for poverty, but diligent hands bring wealth." And this verse is pretty self-explanatory. Just don't be lazy, because when you're being lazy, you will not build wealth. And for some reason, when I read this just now, I thought of one of my former employees. Now, this former employee is a friend of mine and still is to this day, because I used to own and operate a few restaurants, and he was the manager for both. But when it came time for his yearly review, I sat him down and I asked, "Hey, have you started investing yet?" And he told me no, so I quickly gave him a rundown, and from there we developed a plan that he could use moving forward to build wealth. Now, at the time of this meeting, it was February of 2020, and the plan that we came up with was very simple. He was going to just dollar cost average into a market-based ETF such as SPY or VTI, and he was going to do that every single time he got paid. Well, as the months went by, I kept asking him, "Hey, did you get started yet?" He would keep saying no. "Did you get started yet?" He would keep saying no. "Did you get started yet?" He would keep saying no. And now here we are nearly 5.5 years later, and he never got started investing. And the stock market has basically doubled from the time that we had the meeting in February of 2020, which was right before the pandemic crash, to where it is today at all-time highs. And so I can't even imagine how many thousands of dollars he's missed out on by just being lazy. So the moral of the story is, it does not pay to be lazy, just like the scripture says. But of course, I have to show off some people who are absolutely not being lazy, that are in the Trade to Freedom community and are using the stock market as their personal money printer. Now, first person we have Keisha. She says, "Patience, little grasshopper. My Amazon vertical spread put for expiration August 8th paid off. Largest win and first win for August. Let's go." She showed off the screenshot. She made $113.50. And let me tell you why this is beyond amazing, because Keisha specifically, she came into the community maybe just a few weeks ago with a much smaller account than what we recommend. And she made a post saying, "Hey, I'm here. I have a smaller account than what was recommended, but I don't care because I plan on learning the skill that will help my family eat for generations to come." And I said, "Okay, Keisha, do your thing. That's what we're here to do. Let's do it." And so Keisha, shout out to you and all your wins thus far. And then we have Steven here. He says, "My biggest month to date, $17,000. Guessing it's all the inflated premiums from earnings season. All cash secure puts in the wheel." And that is amazing. So Steven, shout out to you for a record month. You are printing some serious cash. Now, for anybody who would like to join a cool community, come join us in Trade to Freedom. The link is below in the description. But not only will you get my exact trades when I answer them, but you'll also get my full options framework via the Trade to Freedom course. You'll have access to ask me questions at any given time, and lastly, you'll be within a community of other traders, as you see, that all have the exact same goal. So if you are looking for an amazing community, the link is below in the description. But with that being said, let's get down to business. And the first stock that I'll be discussing today is Adobe, ticker symbol ADBE. Now, if you're not familiar with Adobe, I'm sure you're familiar with one of their products. Adobe is the company that created Photoshop. All right, so that is probably their most popular and well-known product. However, they have a full suite of different programs such as Adobe Lightroom, Adobe Premiere Pro, and several more. Now, I may be a little biased on this company because I've literally used at least one of their products pretty much every single day for the last 13 plus years. All right, I own a photography company as well, and so we use either Adobe Lightroom or Adobe Photoshop every single day. But Adobe has seen a steady decrease in price recently because of AI. For some reason, the assumption is that AI is going to fully take over their business and that they need a new business model in order to survive. But the problem is, I don't think that could be any further from the truth. And quite on the contrary, I believe that AI is actually helping their business, and the numbers would back me up on that. Because the bigger and bigger that AI has gotten, the more money that Adobe has made. And they've actually had even more revenue growth since the release of ChatGPT than they did the year prior. And so let's go ahead and take a look at some data for Adobe. So just looking at their financials, we can see that their revenue has continuously grown year after year. So they had revenue of $12 billion in the year ending November of 2020, and they had revenue revenue of $21 billion in the year ending November of 2024. And so the demand for their products is just becoming larger and larger, even with AI around. And the reason for that is Adobe is using AI to their advantage. They actually developed a product called Firefly that fully utilizes AI to be productive when it comes to making and editing photos and videos. And they are actually at the forefront of that because they have other companies reaching out to partner with them as far as their AI initiatives. And with all of that growth, you would think that Adobe's stock price is going up. However, it has only been going down. So let's take a look at the chart. All right, so now looking at this chart, we can see that Adobe peaked at about $638 on January 29th of 2024. And pretty much ever since then, they've been on mostly a downward trend and now are trading at $342, which is nearly half of what it was just January of last year. And most of that has been due to the perceived deterioration that AI is supposed to be doing to their company. However, like you just seen with the financials, they are only going upwards when it comes to that. And if we look at their PE is currently 20. So it's trading at such a great value compared to the market, because I believe the market is trading at around a 23 PE currently. And there's no reason that a company with so much growth potential should be trading at these numbers. And so let's move on and look at a little bit more data. Now, out of the 34 analysts that are currently covering the stock, you can see they have it as a moderate buy. And if we scroll up here, we can see their price targets. They have a mean target of $493. And since the stock price is currently $342, that means they see tremendous upside to this company. All right. And some analysts have it as high as $605, while one analyst has it at $280. But the price I like to pay the most attention to is the mean target, which is $493. And since they have earnings next month, if we look at their performance, we can see over the last 4 quarters, they have beaten analyst expectations every single time. All right, 4 quarters ago, a beat of about 5%, then 8%, then 5%, and then 2%. All right, so not huge beats, but beats nonetheless. But since I'm so bullish on this company, I would love to get access to it via leaps. However, I only enter into leaps after a sell-off and when the data tells me to. So let's go ahead and look at the data and see what it is saying currently. Now, when it comes to buying strategies, one of my favorite technical indicators to use is the stochastic. And so if we look down here, this is the stochastic, but the stochastic just aims to show you where momentum is taking a stock. And quite frankly, if the stochastic is pointing upwards, that means the stock has upward momentum. And if it is pointing downwards, that means the stochastic has downward momentum. And as you can see, the stochastic is currently pointing downwards. And so what I want to do is I want to wait for the stochastic to reverse and then come back up out of this oversold area. All right, so everything 20 and below in value on the stochastic is considered oversold, and then 80 and above is considered overbought. And so the stochastic is currently in the oversold area, and so I want to wait for it to curve back upwards and come up out of the oversold area. Now, when I'm looking for leaps, I always use the weekly candles. All right, so this stochastic will look at the last several weeks worth of data. And so hopefully this stochastic will start pointing upwards here in the next few weeks. However, I will need to wait until then in order to start buying my leaps contracts. Now, another thing that I noticed about Adobe is that it's at a good level of support. So now I'm looking at the last 3 years, and you can clearly see that there is a level of support right here in this 320 to 340 area that is currently trading at right now. All right, and this goes back all the way to November of 2022. We could see it kept bouncing off of the levels here, then it went up and bounced off the levels here, then it went up, then bounced off the levels here, and then it went up for quite some time, and now it's right back down, and it bounced off the level again just in April after all the tariff drama, and it bounced up, and now here we are again right back at that level. And so those are all good things to see. And so now let's go ahead and go into the Moomoo platform and look at potential leaps contracts. And real quick, I have to give a shout out to the sponsors of this video, Moomoo. Beyond just being an amazing platform, they have one of the best promotions I've ever seen going on right now. So if you open up an account right now and put money into it, you can get up to $1,000 in NVDA stock absolutely free just for opening up an account and placing money into it. And so this is definitely something to take advantage of. On top of that, they're offering 8.1% APY on your idle funds that are just sitting. So it makes all the sense literally just to open an account, place some money in it just for these perks alone. But on top of all of that, their mobile platform is next level. Taking a look at their mobile app, so you can see here, you can see a lot of general information such as earnings and earnings calendars and earnings beats and economic calendars. However, what I like most is this investment theme. So if we click on investment themes, here they categorize stocks based on what they're impacted by. And so what I like most is this one that's called Nancy Pelosi Portfolio. Now, if you're not familiar, Nancy Pelosi is a US Congresswoman, and she seems to always select the right stocks right at the right time. And so Moomoo conveniently put all the stocks that she is currently investing in right here on this list for you to see. And so if you just wanted to follow what Nancy Pelosi is doing, you could follow this investment theme in Moomoo. But go ahead, check it out. The link is below in the description. You can get up to 60 free stocks, and you can only get that with this link. So go ahead and click it, and you can thank me later. All right, so here we are at the options chain for Adobe. And what I want to do, if I plan on buying a Leaps contract, I like to go to the furthest out expiration. All right, and so I'll come down here and I will go to whatever the furthest expiration is, which is this date that is 863 days out from now. That expires in December of 2027. Now, why do I go to the furthest out expiration? Because it gives me the highest probability of profit. All right, now the trade-off to that is I will have to pay more for the contracts that I'm buying. And so if you want to pay less, then you can come to an expiration that is closer to today's date. And for doing so, you will pay less money for your contracts. However, I want to give myself the highest probability of profit. And so I'm going to come down here and look at the furthest expiration. Now, I'm going to remind you again, I'm not going to do this trade right now because the stochastic has not informed me to go ahead and do so. And so while I wait around, I'm going to sell puts on it at cheaper prices so I can get paid to wait around. And so I'm just showing you this leap strategy now so that you can be ready when the data says to be ready. All right, but let's come down here. I'll select this. And from here, I want to look at the delta. And so I normally go to about a 0.70 delta when it comes to buying Leaps contracts. So we can see right here at this $320 strike, it's at a delta of 0.71. And as far as the premiums go, it looks like I will be paying anywhere between $95.30 to $98.75 for this contract. And of course, every contract is worth 100 shares. So I'll be paying anywhere around $9,500 to $9,800 per contract right here, right now. And so let's say I was fine with doing so. I could just come over here and select the ask price, and then Moomoo will conveniently load up your ticket for you. And from here, I can select the amount of contracts that I want to buy. And it's already right here at the mid price of $9,097.02. And since this is a buying strategy, the most that you could potentially lose would be the amount that you are paying for the contract. However, we would never take that amount of loss because once the stochastic started to reverse again and go back in a downwards direction, then I would go ahead and close the trade. However, let's go ahead and look at the P&L chart to see how this trade would pan out depending on the price of Adobe stock. All right, so here is where Adobe stock price is currently, where these white dashes are. And if we look at these numbers up here, to the left, you can see how much the contract will be worth upon expiration of the contract several years from now. And then on the right, you can see how much the contracts will be worth today. All right, and so we know this is a bullish strategy, and so the value of the contract will increase as the stock price goes up. And so as we slowly go up, we can see how the value of the contract increases slowly and slowly. And over time, if the stock price continuously went up, then the contract would be worth more and more and more. And so if the stock price were to go up anywhere near where analysts believe that it is worth, then we can see the contract will be worth quite a bit. And what I would likely do as an option seller is I would come over here and I would also sell covered calls against it, which would turn it into a poor man's covered call. And that would just allow me to hopefully make income off of this contract every single month as the stock price slowly appreciates. However, like we said, the data does not show us as of right now that it is time to buy Leaps. So let's look at possibly selling puts. All right, so here we are back at the options chain. And since we want to get paid to wait around while we wait for the stochastic to start pointing upwards, I'm going to go ahead and sell puts. And from here, my rules are as I go up to 45 days out. And so if I look at this expiration that is 44 days out, I'll go ahead and select that. And from here, we already know that there was a good amount of support anywhere between 320 to 340, where it's currently at now. And then on top of that, Moomoo shows you the expected move right up here, which is $38. So that is just the options market saying that at maximum, it currently has priced in a $38 move upwards or downwards for Adobe by this specific expiration date. And so if we were to subtract this $38 move from the current stock price of 342, that will put us around 304. And so there is a strike price right down here at 305. However, I would like to be even more conservative, and so maybe I come down to this $300 mark. All right, and that is at a delta of 0.16, and I typically like to stay at deltas below 0.20, so that works out perfectly. And we can see I will get paid anywhere between $500 and $530 per contract for opening up this trade. Now, that is exactly what we are doing already in the Trade Your Freedom community. So if you are in the community and you got in on this trade, so you know that we are already up on the puts that we sold on Adobe as we speak. However, if I were to enter into it right here, right now, then this $300 level looks good. Now, remember, when you're selling puts, you are agreeing to buy the shares of the company if the stock price were to drop below your strike price by the expiration date. And every contract is worth 100 shares. And so at the $300 mark, that could be $30,000 worth of Adobe that you would have to purchase if and only if the stock price dropped below your expiration by this date. All right. And so if your account is not of a size that could handle that, then you may want to turn this into a credit spread to give yourself a little further protection. All right. So check out the last video that I posted. It was all about credit spreads and you can learn about it there. But that is Adobe. So let's say if we were to open up this trade and sell this put, I'll click here and the mid price, I would get about $515. And then if we look at the P&L curve, we can see that as long as Adobe stock price stays above that $300 mark that we set, we just make our money and we go about our day. All right. And we'll have made $515 per contract. Even if the stock price goes up, even if it stays the same, even if it comes down. All right. But if it comes down below our $300 strike, then we will start to make less and less money. And you can see our break even point is right here at $294.85. And then from there, if the stock price were to go down even further, then it becomes even more of a losing trade. All right, but the data tells us that we should be in good hands. All right, and that is my spiel on Adobe. But now the second stock is ticker symbol ASML. Now, if you're not familiar with ASML, they are a company that produces machinery that makes it possible to create different designs in chips in AI chips. And ASML is probably the only company in the world that literally has a monopoly. Now, we'll use that word very loosely for great companies that have a strong hold on their sector, such as Google. We'll often say that Google is a monopoly for search engines simply because they are so far ahead of their competition that it doesn't even make sense. However, there are still other search engines out there. All right, there are still the Yahoos and the MSNs of the world. However, with ASML, they are literally the only ones in the world that do what they do and currently have the capability. All right, well, I actually take that back. There are two companies that have the capabilities to do what they do. However, they are unwilling to do it. And those two companies are Nikon and Canon. All right, they have the technology to make the lithography machines that ASML makes. However, they have never been interested in doing it. And so even if they were to start now, ASML already has a 30-year head start on everyone else. All right, and the equipment that they make is needed in order to make AI chips. So if you are bullish on any AI chip company, you should also be bullish on ASML because they can't do it without ASML's machinery. But ASML just had earnings 3 weeks ago and their stock price sold off just after that. And so I think we are coming up on a very good opportunity. And looking at this recent article from Seeking Alpha, it says ASML, the case for 2026 growth. And the summary is ASML's Q2 results beat expectations, but management's cautious 2026 outlook and China exposure spooked markets, creating a discount opportunity. Despite headwinds, ASML is aggressively buying back shares, signaling strong management confidence in future growth and boosting EPS potential. All right, so we can stop right there. First off, when a company is buying back their shares, it's typically because they believe that it is undervalued, okay? And when a company buys back their own shares, it's no different than when we buy shares. It's because they believe that it is worth more and that it should go up over time, all right? And then valuation multiples are at decade lows. I see ASML as undervalued with potential for 30% upside as industry fundamentals remain robust. And then lastly, it says pessimism is overdone. AI chip demand and resilient customer spending support my upgrade to buy, viewing this dip as a buying opportunity. And so let's go ahead and look at some further data. So first things first, let's look at the fundamentals. We can see going back to the year December 2020, they made $15 billion. And 5 years later, in the year ending December of 2024, they basically doubled their revenue and now are doing $30 billion per year. And now if we look at analyst targets, first off, they have it as a moderate buy, and that's out of 25 different analysts. But if we scroll up, we can see the current stock price is $690. However, the mean price is $891. And on top of that, the low target, so the most bearish analyst that is currently covering the stock, has it as a price target of $743. All right, and some analysts has it as high as $1,000. And that's one of the things that makes the most talented investors so successful, is when you can see a mismatch between what a stock price is at currently versus what it's actually worth. And I do believe that ASML is worth much more than the $690 price tag that is on it currently. And so let's go ahead and take a look at the charts. All right, so again, looking at levels of support, we can see one that is at the bottom of the Bollinger Band. And so that is a good sign, but it did at one point show a little bit of support at the $650 level, which is right here. We can see it came up and it hit the 650 level, and then it came and then it bounced up and stayed up for quite some time. However, if that doesn't hold, then the $600 level is an extreme level of support that goes back all the way to a few years ago. All right, we can see it hit 600, bounced off of it, hit 600, came down a little further, but then bounced back up. And then again, recently in April, during the tariff drama, it hit 600 again and then bounced off. And now here we are. Now, again, when we're doing leaps, I want to look at my stochastic, and the stochastic clearly is in the oversold area and it's very low. The stochastic K is at a value of 6. And so that's good that it's already oversold, but what I need for it to do now is to start curving upwards and come back above 20. And then and only then when that occurs, I will start to buy leaps on ASML. However, I would love to be paid to wait around for that to occur. And so let's head on back to Moomoo and look at a potential trade while we wait. All right, so now we're back in the options chain, and if you were ready to do leaps because the data told you to, then you can go ahead and follow the same process that we did for Adobe. Since it has not told us to do that yet, I want to get paid to wait around and go ahead and sell puts or credit spreads. All right, ASML is obviously a pretty large stock when it comes to price tag at $690, and so most people may not be comfortable with selling puts on this stock. And so what you could do is you could just turn it into a credit spread. And to do that, let's follow the exact same process. So I want to go within 45 days out. And so I'll select the exact same expiration that we use for Adobe. So I'll click that. And remember, we did see a good amount of support at 650 and then extreme levels of support at 600. But if we come over here and we look at the expected move, we can see it's plus or minus $51. And with the current stock price of $690, that would put us around $640. Worst case scenario. And so let's go ahead and do that. We'll come over to the $640 strike. And then if I wanted to sell the put, then I would just hit this bid price right here. However, if we were to sell that put, then we technically need $64,000 in our account in order to do that. And so let's go ahead and turn it into a credit spread. And what I'm going to do is I'm going to do a $10 wide credit spread and buy the $630 put. All right, so I'll go ahead and select that too to add it to the ticket. And we can see if we look at this max loss, it took us needing $64,000 in our account down to 820. All right, so that makes it so much more feasible for other people to do trades. And again, I just put out a whole video on credit spreads, so make sure that you check out the video that was posted just a few days ago. But if we take a look here, we can see we'll have a max profit of $180. And for that to occur, we just need for the stock price to stay above 640 by our expiration date. All right, but you don't have to hold on to the contracts the entire time. I typically take profits anywhere between 50 to 80%. And if the right things occur, then that could happen very shortly, sometimes even with just a few days. But take profits at 50 to 80%. And then if you wanted to set a stop loss, you could set a stop loss to a multiple of the premium that you received if you want to reduce what your max loss would actually be. All right, but if we come up here and we look at the P&L curve, we can see the ASML stock price is here, right at $690. And if it goes up, we just make $180 per contract. If it stays the same, we make $180 per contract. If it goes down, then we'll still make $180 per contract. But it's not until it drops below 640 that we start to make less. And then our break even point would be $638.20. And then a worst case scenario is if it dropped all the way below 630, and that would be a max loss situation of $820. But again, we would have set a stop loss to be taken out of this trade before it got anywhere near a max loss. Okay, and so those are the numbers for one contract. However, you can boost up the contracts to whatever fits your account size. But those are the two stocks that I am really looking forward to buying leaps on, Adobe and ASML. So let me know in the comments below if you're interested in these companies as well. I think they have amazing growth moving forward. But that's it for this video, guys. If you would like to join an amazing community, Trade to Freedom, the link is below in the description. We would absolutely love to have you and help you build your wealth from here. But that is it for this video. I will see you guys. Peace!